Of the day today. Joining me, Jason Raznick, is the founder and chairman at Benzinga here in Chicago. Jason, great to see you again.
Good. Thank you for having me. Appreciate it, Oliver. Yeah, great to be here.
I think the last time we spoke was early on in this network's history,
Yes.
when it was TD Ameritrade Network. So welcome to the Schwab Network.
Thank you.
I know you guys have developed a lot over the last few years. It's been a pretty big, 4 years for retail traders.
From COVID to people getting into investing in trading and not knowing what to do, and then you have the meme craze. I remember the whole GameStop, and we would write content about, like, say Goldman Sachs downgrading GameStop. People would get mad at us. But one of the biggest fears I always have in the market is a generation of investors leaving. And you knew when GameStop was going to 400 and all this stuff, like, diversify or take some off. And people didn't. And I would be out there outspoken about it because I didn't want to lose a generation of investors, because that's what happened. I'm 46, but in the dot-com era, when stocks fell, I'm talking about there was so many IPOs that just went bankrupt, and people didn't want to ever invest in the market again.
Yeah,
I remember
burned.
it. I was burned. I'll never invest in the market. So when this craze, I'm like, takes, and people would get mad, but I was like,
right.
So.
I felt some of that too sometimes when you try and actually take like a financial scalpel to some of the companies that were going nuts, that people were very defiantly supporting, that they didn't want to hear the other side oftentimes. But what I do kind of wonder is, do you think it was a net positive? I mean, when you think about a lot of people that did lose money, but then a few also that hit too.
Yeah, I think it's a net positive, but it was close to being a net negative in the sense that if people, I think because of social media, because of networks like what you do, people learn more, like, hey, people are telling you, don't put all your eggs in one basket. Now, some people did. Like, some people there was people that would reach out to me, because I put my phone number on one of these Reddit forums, like, call me, I'll explain. I'm not saying you're wrong. You could be completely right, but it makes sense to shed some of that, take some of the shares off. Now, their argument would be like, this is the next Amazon. And that could be true. And so but my point is, if this is most of your life savings, then it doesn't make sense to be in one thing. So I do think over time, people have gone maybe a slightly more conservative, like looking at indexes, not necessarily just individual stocks like they before. I think everyone needs that time to just buy individual stocks, lose money, and then I'm not saying don't buy individual stocks, but it's a diversification. Like, at least at Benzinga, that's what we see with people when we're trading or investing. Look, we see them looking up indexes way more than they ever have.
Well, it helps when the indexes are so skewed by this massive secular trend and concentration. I want to ask you about that, but before, real quick, a follow-up. I've kind of described, especially the second round of some of the meme stuff that's been going on with GameStop and Chewy, it's almost like a big GoFundMe in a way. It's like people are willing to donate to keep something going without expecting much of a return. I mean, because the stock, from GameStop's standpoint, still has not been a return for the vast majority of participants.
That's an interesting way you said the GoFundMe. So our CEO, Jerry Ferrari, came from IBD, Investors Business Daily, and they have their models of Can Slim and how they look at the technicals and stuff. There's no technicals and stuff to explain these things, right? It's selling that story. And when I started Benzinga in my basement, I used to get people emailing me and writing this story, like, Warren Buffett's going to buy this insurance thing, and I'm like, and they wanted me to write about it. So, and the story sounds so good, and that's what I think is happening a lot of it. It's like, who can write the better story? And it's not to say 100%. That Chewy can't. Yeah, so that's
100%.
And that's what GoFundMe is. Who can write a better story? Now, GoFundMe, I think, is an amazing platform. But it is
the stock market kind of veering in that direction.
And you don't want to miss it. Like, I missed the GameStop in some respect, right? And so
What about right now? How do you think this affects people's mindsets? Does this prove out basically passive investing and the whole Bogle theme? Like today, when we have one secular theme, it's the only place for growth, and it's just driving these indexes higher.
It's interesting. I mean, the Bogle thing, just buying it now. But if those 7 stocks fall, then the index gets killed, right? So I have indexes. I have some of those stocks, but I also recently started buying equal weighted S&P 500.
Oh yeah, RSP.
Because if those 7 fall, then everyone gets hurt and everyone's back to that whole thing. So I think it's a little bit diversify away from that big one. But to your point on Bogle, there's a lot to be said for that. I mean, I don't know what people's ideal portfolio allocation is, but it's like, hey, if you were in the stock market the last 3 years,
you're happy as a clam.
Yeah, and so that's,
camper.
I know, and so, yeah, that's the part.
Various ways to win. Some of the speculation during some of the speculative eras, but also today the passive works. Jason, great to catch up.
Thank you for having me on. You're doing an awesome job, and I love tuning into you daily.
Appreciate that very much. Thank you very much. Jason Raznick, founder and chairman at the one and only Benzinga. All right.